Hello, everyone. Thank you all for waiting for us as we got set up here, and welcome to the Crypto Week in Review. Glad to have you all with us, as always. And of course, I say it every week, and it's always true. What a week it's been. Number of stories we've been following this week. Some are some older slow burners that have had some new developments. Others were something of a surprise. We're going to cover some NFT news for you today. We've got some updates on the Tornado Cash situation, as well as, finally we'll end up talking a little bit, as we do pretty often, a little bit about Ethereum and some of the things on the horizon there. So let's get started. This week kicked off really with a story that Christian sort of prognosticated last week. You guys, if you've been following the saga around DAO, which is a quote NFT fi project that allows holders of blue chip NFTs to borrow ETH, I think up to 40% of the floor value of the collection. But as we discovered as we were looking at this, the mechanics of DAO are actually quite complicated, and when floor prices start to drop, things can run into trouble pretty quickly. So, Christian, you had the lead on the story. You've noticed it before the rest of us. Can you give us a brief rundown of what DAO is, how it's supposed to work, and what actually happened with it earlier this week?
Yeah, sure. I mean, credit goes to Cirrus, who's pseudonymous NFT collector, who's kind of sounded the alarm on this last week. Before this kind of situation started unraveling. But yeah, in summary, elevator pitch for this. DAO is basically trying to financialize, quote unquote, the NFT space. So it's kind of like enabling holders of pristine, quote unquote, again, NFTs like Bored Ape Yacht Club to basically put their assets to work. So if you own a Bored Ape, currently worth about 77 ETH, so it's quite a lot, you can deposit this into DAO and borrow ETH against it. And it is work calculated, but as you said, Jake, based on the floor price, so up to 40%. So at 77, you'd be able to borrow how much is it? Like 32 ETH or so. Basically it's that you have lenders as well. So they put ETH in and they, in theory, get like a yield back. And then basically the risk is with this, if you make a deposit, if you put your Bored Ape in, if it drops below like a certain level, then it can go up for auction. And this means that basically, if it goes up for auction, liquidators can come in, and this is where there's the fear that it can cause like a cascade where, the floor price sort of drops, and then as like more apes hit auction, as kind of the floor price goes down, could like just basically tank the price of this collection and cause chaos in the market, because this is obviously like the leading collection. Bored Apes isn't the only one it's supports, but yeah, it's one of the ones that it's most widely used for. So I think around last week at one point there were around 2% of the like 10,000 apes deposited in there, and it was this guy, this trader Cirrus, who kind of pointed out the risks with this last week, and it sort of kind of actually spiraled quite quickly over the weekend, where partly I think as a result of this sort of viral tweet storm that went out, and also another user of the product called Franklin, who's like a prolific Bored Ape owner. They had at one point 60 apes, and they borrowed a really big sum. I think it was 10,000 ETH or so from this project, and they had a big debt at one point. so 10,000 ETH is about $20 million, right? But they'd paid it off, but purely because they'd borrowed it and everyone could see that, there was like a fear and almost like a loss of trust. So it's similar to like Terra, right? Like once the trust is lost, everyone runs for the exit, and it causes like a bank run, like a blockchain-based version of a bank run. So you had people who deposited ETH, like rushing to withdraw. And yeah, at one point it was like I think there was like barely any ETH left in its reserves, and it had sort of committed all this money that like lent out, and everyone is supposedly earning this yield on it as well. It's sort of like got to a point where it sort of spiraled. It's not quite dead yet, but at one point when I was watching it, their ETH balance was like less than 1 ETH, right? It was down to like 0.75. At the moment, a lot more has been deposited, so it's back up. Holds about $32 million worth at the moment, according to Etherscan. But yeah, I guess the takeaway from this as well is like it's basically the risk of this sort of mechanism, and everyone sort of has a Bored Ape and has for either the art value or the community value, right? But it's like and the flex value, okay? But the added risk that comes with sort of putting these assets to work in projects like this is kind of the message to take from it. And it's like the NFT fire space, although this one was particularly flawed in its mechanism, it's like an alarm and a warning sign of the idea of like collateralizing basically monkey pictures and trying to sort of turn it into a like financial product. That sort of sums it up. It's quite complex, but hopefully that sort of makes it clear.
Thanks, Christian. It's a good like broad understanding of what happened. When we were writing the follow-up piece for this, or rather when you were writing it and we were reviewing what was going on, we noticed that like just the understanding the mechanics of BendDAO was quite complicated. I think at one point, and correct me if I'm wrong, Christian, but didn't during the crisis for people putting ETH in the pool, the interest rate went negative, did it not?
That may have happened. I don't think it did when I was covering. But I think it was something like it was like, let me just pull up the article. There was a point where they had to pay like 100% extra, so there was no incentive to deposit basically.
I think this raises a lot of questions. It was the subject of a couple of newsletters this week, and you brought it up already, Christian. The idea of using NFTs as collateral on a loan. I've written my own opinions on this in the newsletters, but I would like to open it up to the group. I don't want to just give you a simple yes or no question, is this a good idea or not? But is there something we can learn from BendDAO to maybe refine this process in such a way to make it more sustainable, I guess? Or is this, I don't want to just, if this is just an outright bad idea, I want that to be the last conclusion we come to. But to kind of open this up, I don't mean to pick on you, Tim, but you are into NFTs, and I know you think about it, the NFT space a lot. So I would like to get your thoughts on just the concept of collateralizing them, and what extra consideration should be taken into account if you're going to do something like this.
Yeah, for sure. I haven't followed BendDAO situation as closely as Christian, but I've seen some of the reactions to it on social media this week. And it seems like the general consensus is that the collateralization or the financialization of NFTs is like, it's not going anywhere. Like there's clearly demand for it. And, when the markets pick up, that demand will increase. And I think that people are going to keep trying to find ways to make it work. In the case of BendDAO, to me, in my opinion, it seems like it was just their risk management was kind of wacky in that regard. Like they didn't really consider what could have happened, the amounts they're allowing people to borrow and then pay back, and all of that kind of stuff was just not very well thought out. Do I think that it can be done better? Yeah, absolutely. And I think that there's probably teams out there right now that are looking to do that. Pseudo swap, that we talked about previously, I think, and I know a lot of people share this thing, it's like a really big innovation, the ability to create this trustless NFT marketplace, this automated market maker. Like I've said before, that won't be the last we've heard of that. And that's kind of another step towards financializing NFTs. So yeah, I guess overall, watch this space. I'm sure that there will be more attempts to do what BendDAO have done, and they will learn from the past mistakes and probably make something new or innovative, or at least better in some way. And yeah, definitely something to keep an eye on if you're interested in like taking riskier bets on the fringes of the technological advancements in crypto, for sure.
Cool. Thanks, Tim. I think you're probably right. Like, it's not, people aren't going to quit trying anytime soon. Christian, I see you unmuted.
Yeah, I would just say, as like an example of one of these, it's not one I've used or was particularly familiar with, but in response to the BendDAO crisis, I think a few people sort of spoke about NFTFi, which is another project which is quite established, kind of similar to BendDAO, but from my understanding, I think it's more like peer-to-peer, so it's like direct with someone. So yeah, that's one way of kind of, in theory, making it sort of less risky. I would add as well, yeah, it's worth noting that sort of BendDAO did make these sort of adjustments, so they put forward this proposal, but then that kind of raises a question in itself of like, these people have sort of lent out their assets or whatever, and then suddenly they're sort of like making changes, suggesting things that sort of go against. I think it was like they changed the auction timing and the threshold for how low things could drop. Yeah,
it's a little concerning to make changes to an agreement on the fly like that. Tom, I saw you unmuted. I think, did you have something to say?
Yeah, hey everyone. I think the situation is really interesting because it's not like NFTs are like a new kind of asset class, and people are still like trying to figure out what they can do as part of an asset class. But I was thinking about like how like if physical art in the real art world like can be used as collateral, and the answer is definitely yes. But there is never any kind of like automated mechanism to liquidate, real like physical like material art. And I was thinking that maybe NFT financialization right now, what it's trying to do is essentially like set up DeFi products, but for NFTs, like do like just copying the same stuff. Like BendDAO is like, you could see it as an Aave for NFTs. And I was wondering if NFT collateralization may not, in the end, require permissioned products. Like this is one of the use cases where I could see like centralized companies like CeFi, like the companies like actually like being useful here, because not everything needs to be automated. not like automated liquidations are like really cool for like super liquid assets and everything like that. But I wonder if NFTs may not benefit from a different approach. The NFTs themselves are like, you don't need any permission to own them and everything like that. But like the permission to like use them as collateral, like I guess that kind of makes sense to me.
Thanks, Tom. That's an interesting distinction. Or anybody else? Anybody else have any thoughts on that?
Yeah,
Yeah, go
I
ahead.
appreciate what Tom just said right now. I mean, I agree there's going to be a lot of speculation, but if you look at like what happened with Bendao itself, there were people who lent their ETH, and they were like, let's just say that they were believing that even when the LTR ratio, the liquidation ratio reaches 40%, their protocol would just sell those NFTs and they would get back their ETH. But we are seeing that that's not happening. No one is ready to buy at such high prices. So there might be another protocol which says, okay, we are only going to give you 20% of the ETH that you can borrow against your NFTs. And I think JPEG does something similar. And it all comes back to risk management, is like I think what Tom was trying to hint at is that we need managers to kind of handle these positions. But even then, I just like if we go back to the point where how much can an image be worth, and developing a dynamic market on it, which can be attacked by anyone from the outside. So even if like this situation might look like a bank run, but what we have now is that people who lend their ETH are not getting anything back, and these NFTs which were supposedly worth 100 or 200 ETH right now, no one is willing to buy them, and its prices could go down a lot. So yeah, given I don't think that it's like a perfect or even an ideal asset class to borrow from, and I'm not aware of like how the real art world market works and if there is lending on it, but it sounds a bit sketchy because there's a lot to think about, and there's a lot of variables that cannot always be accounted for in code.
Yeah, that you remind me of another detail about the Bendao saga that I think we glossed over, is that the liquidation mechanism for the NFTs that fell below fell below the threshold, which is itself had a complicated in-house formula associated with it. Those NFTs are listed for auction for 48 hours, and there's a certain, I think the minimum bid had to be the amount, at least the amount that was borrowed against the NFT, but I haven't double checked that. But there was a minimum bid associated with it, and the problem here is that, exactly as you pointed out, nobody wanted to bid at those prices. So, what do you do when you get in a situation like that? You just kind of end up stuck.
Yeah. See, you have an asset class which was used to borrow money against, but when the time came, no one wants to buy it. So yeah, so it's like a very big mortgage crisis, and it's inexplicable because like from the start, the values were arbitrary, and even now, if I want to buy it at 0.5 or 500 ETH, it doesn't make a difference. I'm trying like currently what I'm trying to do is flex from it. There are no yields that I can compare it with other protocols, or there's no profit to earn ratio or a cash flow that I can compare from other companies. So like financialization of such a thing is very difficult, and I think it will, like, even if there are experiments, it is going to run into these problems regularly. Pseudoswap might help where it already has an AMM and there is liquidity for some of these tokens, for these projects, but that can be drained quickly as well. So we need a large number of pseudo swaps and like the kind of dexes and like the liquidity that we have on centralized exchanges and decentralized exchanges for tokens. We kind of need to have that, and then we can even start thinking about putting using it as collateral, because even ETH and wrapped Bitcoin are risky assets, and we are just moving on to NFTs because we think they are much more valuable. But it just started 2 years back, so I don't know how reliable it is.
I think there's sort of a key difference here between like the financialization and collateralization of NFTs, right? I think what you're talking about, Nivesh, is like the financialization where you have ample liquidity for these things to be traded trustlessly. And yeah, that's definitely one avenue it can go down. And I completely agree with your comments on that. But just to collateralize NFTs and just to be able to turn them into something you can borrow against is like a much easier thing to do. And I was thinking like in the case of like you've had Picassos, they're universally recognized as having value. And you'd be mad not to buy one for 20, even maybe 40% of the book value in most cases, because you could easily turn it around. I think the problem is you're using Bored Apes Yacht Club NFTs is while they have such a high value, people aren't confident in that value in the same way as like a Picasso would. They would have confidence in the value of that. So
Picasso
maybe
has value. No, I understand. Like Picasso has value right now, but even that is like the society decided that it's going to have such a value. But maybe in some parts of Africa or some other parts, people don't want to buy it. No, that's actually a bad example. What I'm trying to say is that liquidity matters. You can like to someone to whom a Picasso is valuable, maybe you can have like one-on-one agreements with a guarantor or a banker being involved, and all these three parties they value this, and they'll have a closed liquidity, and that can be facilitated. But if you move to a public domain, then why I said that we need something like SudoSwap to grow, because it will come down to liquidity. Because even if you're putting it just as collateral, in the end you need to sell it, and to sell you need liquidity. So that was like how I was trying to picture it.
yeah, I completely agree. It's just sort of like going back to like Picasso's or just fine art in general. Like in terms of how much of it is on the market, I don't know any specific figures, but I guess there's a pretty decent amount. But most of it's traded through auction houses like Sotheby's or Christie's, and that's sort of the velocity at which these pieces of art can move is relatively slow because of that. But it doesn't mean you can't use them as collateralize against, to borrow against. Sorry. But yeah, like if you had an automated market maker, it would never happen because these are physical objects. But if you had one, it would speed up the velocity of them. They could be traded much more easily and fluidly, and it would create a much different system.
Yeah, I would just say as well, if it's like a Picasso or, a Leonardo or whatever, one of these like, goats of the trad art world, if that's the term now, is probably one we'll be using soon. They kind of have like Lindy as well, because like, there's in the case of someone like Leonardo da Vinci, it's like the stuff is like hundreds of years old and is kind of seen as one of the all-time greats. They're also like dead as well, so there's never going to be another one. Bored Ape Yacht Club, they might do another mutant ape thing next year, and they've been around like 16 months now. So yeah, I guess it's kind of different. And yeah, I would add as well, just if I did have one of these apes, or like if I had a Fidenza or whatever, I would be satisfied just holding it in a vault. I wouldn't be kind of putting it to work in these things, even if it can work in the future. For me, it's just a bit outside of my like risk tolerance.
Yeah, I would be a little hesitant as well, but you guys know me, and my risk tolerance is relatively low for this space. I think we could talk about what makes a piece of art valuable all day and still never arrive at a conclusion, I guess. But I think that does kind of dovetail into our next kind of subtopic here. While we're on the subject of Bored Apes, it's worth mentioning that yesterday it was announced that Snoop Dogg and Eminem are going to sort of do another. For those of you who watched the Super Bowl this year, there was kind of Snoop Dogg was the headliner at the halftime show, and they incorporated some metaverse stuff into the performance. You know, I didn't participate myself, but the next day on LinkedIn, I saw, videos taken from Oculus perspective, right? And there were people who were like on the stage with Snoop, and that was kind of cool. So they're going to do a similar thing at the VMAs on MTV this year. That's going to be Sunday night, and Yuga Labs is helping produce it. There's probably, they've put out a press release, so they obviously are very proud of whatever they're going to do. Supposedly the stage is going to be transformed into like an other side themed reality of some kind. And, that's all well and good. Cool. Good for them. The reason I want to talk about this though is, so when we're talking about identifying markets, we're always sort of distinguishing between the crypto native market, the retail market, this idea of the fabled mass adoption that's going to come one day that we all are looking forward to. Plays like this tend to strike me as, if Yuga Labs is involved in the production, then probably the idea is you want to expose more and more audience to the Bored Apes, drive their value, drive their social clout, their recognizability, and so on. There are still people in the world who don't know what they are. I guess I'll open this up. Tom, you wrote about this, and we also talked about what makes a good halftime show, or whatever. We talked a little bit about Prince yesterday and his epic halftime shows. But Tom, what do you think about bringing the Bored Apes to the MTV stage? Like, is it cool? Is it not? Like, I remember there was a famous clip from Jimmy Fallon when Paris Hilton showed off. He and Paris Hilton showed off their apes, and there was just this audible cringe moment in the audience. It didn't land at all. How do you think this is going to go down? Is it worth the time, or is it a stunt that's going to look stupid? Or what's your gut feeling on this, I guess?
I really have no idea. I don't know. I'm not a fan of the apes to start with, so like, I'm like, I'm not as NFT oriented as Tim, Christian, or Anthony, and I kind of think it's interesting that Eminem and Snoop Dogg are like leaning into it for seriously leaning into it. I don't know what the audience reaction is going to be like. I'm always surprised by like what people outside of crypto think of, like when it comes to like some of the products that we use and everything like that. Like I'm all, like maybe Tim's got a better understanding of it because he was saying they are starting to look uncool by leaning so much into apes. But I don't know, like if a thing that people think the most about, like if the keywords that come to people's minds when they see Bored Apes is like, that shit is fucking expensive, and also, oh, each time you mint one NFT, it boils the oceans or something like that. I can imagine it like going like not being received like particularly well, but at the same time, like maybe looking back, people will say like, oh wow, this was really cool. Like it kind of depends on like how people feel about NFTs and specifically Bored Apes like down the line. which I don't know, like if you take it back to like more traditional forms of art, like Shakespeare was really popular, like only became really popular like quite recently. Like there was a whole century where no one was talking about him. So I have no idea.
Well, I mean, well, thanks for your candor. That's appreciated. I'm immediately the parallel I immediately think of is this is a little dorky, but if you guys remember Monty Python's Flying Circus, it's said that when the first episode was filmed in the 60s, the audience they used a real laugh track, and if you watch the episode, you can see it. Nobody laughed. You can hear the confusion in the room because nobody had any idea what they were looking at. You hear similar stories about like a Bertolt Brecht play or something like that. Do you think, and Tim, I want to turn back to you on this one. Is there potential for that kind of is there still enough space between the average person and an NFT metaverse aficionado that they can see this on television and just not have the first clue what to make of it? And if that's the case, how do you bridge that gap? Do you have any thoughts?
Absolutely, yeah. I can definitely see that. I'm trying to think of other examples, and the first thing that came to mind was like late 80s, early 90s American like cartoons, mostly like The Simpsons, right? That was one of these things that when people first saw it, they didn't know what to make of it, and then 10 years later, it was a cultural phenomenon. Bart Simpson was advertising Butterfingers, and it was just everywhere, And yeah, I could definitely see something like that happening with Bored Apes. Right now, I can't see it myself, but I know that there's the potential for that to happen. Your culture is a wild beast, it can go wherever it likes. We are, just mere mortals. We can't constrain, what people find cool or compelling. In that regard, yeah. And maybe to touch on the point that Tom was saying as well, to go back to like what started this discussion, is I think this MTV show with Eminem and Snoop Dogg, I think it's everything that the halftime show was meant to be. I followed the Super Bowl earlier this year quite a lot, and there was a lot of speculation that Snoop Dogg and Eminem, who did perform there, were going to be incorporating their Bored Apes into the performance somehow. It didn't happen, despite the fact that there was some apparently quite credible sources saying they had worked on like 3D visuals. And now I'm thinking maybe this MTV show has been in the works for quite a long time, since before the Super Bowl. And those sources were correct, but they were talking about this MTV show. That would make sense to me. And then I guess the other point was like, is it too little too late? Everyone was super hyped to see, their favorite musicians, with Bored Apes. Obviously they thought it was going to pump their bags a lot. But to me, it just seems like before I get into this, I'm a big fan of Eminem and Snoop Dogg, have been since I was a teenager. And I think therein lies, nice. It's like, I was into them when I was like 14 and, I'm 29 now. It's a long time ago. They're kind of getting old, they're not cool anymore. The Generation Z, or even the generation after them, whatever they're calling that these days, they didn't grow up with these artists. I don't think they have the same connection to them, and they don't see them as cool or even, revered in the same way millennials do. So I do wonder about that, as like they're heavily leaning into, people like Eminem and Snoop Dogg because they're interested in apes and NFTs. But is it really what like the young people of today are into? I don't know. So that was kind of my point there, is like maybe it's starting to seem a bit too corporate, a bit too uncool for like, young people today. But that one, I guess, remains to be seen. I still think though that, if they've got a hell of a lot of money, Yuga Labs, and they could really make this other side metaverse into something massive that it just completely transcends a bunch of ugly apes, that Eminem bought one for a few million, right? It could be so much more than that. And in the future, people will be playing other side and they won't even know that it started with this like weird ape collection. It could be something completely different that they're just a small part of. And I've seen that happen before. Could happen, it's so much up in the air right now. It's very speculative, but it will be very interesting to see where it all goes.
Thanks, Tim. I'm 35, and the idea that the kids coming up these days don't think Snoop Dogg is cool is just grates at everything in my being. But that's okay. They're entitled to their own opinions. Tom, you're relatively young. Do you think Snoop was cool?
I love Snoop. I love pretty much everything. I like just quickly. I think I would personally be a lot more excited. I think like Gen Z would be a lot more excited if it was someone like Zendaya or Billie Eilish or I don't know, Lil Nas X touting NFTs, and like so far they've not. Like Tim's onto something. It's like really established artists that are like using them as social symbols. Even like the youngest one I can think of is Justin Bieber, but like he's kind of an exception because he peaked so young, and he's still relevant, but he became so famous so young. I put him on a different generational thing than the others. So it would be better for more contemporary artists to be sporting them.
Well, I want to move on to the next topic because I think we've dwelt long enough on this. But I would say that this is a classic problem in marketing. Why do you market to adults? Because they're the ones who have money. I'm not sure if there's really a market among Gen Z for NFTs. Like that's the kind of disposable income that someone that age may not necessarily have access to. And that's a very, very broad generalization. I'm aware, but something to keep in mind. Any last thoughts on NFTs before we move on to something else? All right, then. Want to provide a quick update on the ongoing Tornado Cash saga. A couple of things of note came about this week. The first was, you guys may have seen, Representative Tom Emmer, who is a Republican from Minnesota, definitely Republican, I think, from Minnesota, sent an open letter to the Treasury this week. It was reported in a lot of, we're in the media, so we go for strong headlines, right? So you would see headlines like Tom Emmer slams Treasury on Tornado Cash sanctions or something, right? But really the tone of this letter was really quite polite and dare I say professional. He sent a letter to the Treasury essentially asking a lot of the questions that the crypto community has had in response to the sanctions on Tornado Cash. Things like, why would the Treasury take the step of sanctioning a piece of software as opposed to a person or entity as is traditional? What are the implications of doing something like that, et cetera, and so on. Emmer has definitely emerged as a crypto ally on the Hill, and he seems like he is going to continue positioning himself that way. I don't know how that's going to advance his career in Congress, but I guess we'll see. As I think we're all in agreement that crypto is not going anywhere, and it will become a more and more important aspect of policymaking that needs to be dealt with. So he's someone to definitely watch. At the same time, while it might have been even the next day, a Netherlands judge ruled that Alexei Pertsev, the Tornado Cash developer who was arrested 2 or 3 weeks ago, will have to spend another 90 days in jail at minimum for some legal bureaucratic reason. This is obviously a little more serious than playing around with NFTs. I guess while nothing is nothing here is too dramatically different than it was. I'd open it up to the group to ask, has this week's developments, or have these developments this week, provided any added color or nuance to your thinking on the Tornado Cash sanctions? Did it, has it brought anything new to mind? Anyone have any initial thoughts, or should I pick somebody? Tom, good man.
I think the Netherlands suck.
Oh.
No, like
Do they need to apologize?
No, like I do think it's telling that the Netherlands are like keeping Pretsev, I think his name is. Sorry, I'm looking at.
Yeah, I'd have to.
Yeah,
that's right.
I think it's telling that they're keeping him with no charge. I think it's a little bit ridiculous that the judicial system allows like to be held for like 90 days or 110 days or something like that. Like I read somewhere, without charge, but that's a personal opinion. The fact that he's not being charged at the moment means that I think you could interpret that as like they are waiting for further like clarity on the situation, maybe like the rest of us. And I think Emma's letter to the Treasury was also in search of like clarity. As you said, it was a very polite letter. He wasn't blasting the Treasury. He was genuinely asking, what does it mean for in this case or in that case? So like he was talking, for example, about the innocent, law-abiding U.S. citizens that may have used Tornado Cash and seen their like funds frozen. He said, like, what is their recourse? Like, how do they deal with the situation? So essentially, I think I'm not going to call it backlash, but I think like some of the ramifications of the sanction are like starting to be like questioned openly or implicitly, and I think we will have more to discuss on this further down the line. But it is promising. I've seen there's more and more like crypto firms also like challenging the thinking behind sanctioning Tornado Cash and everything like that. So we'll have to keep a close eye on it.
Thanks, Tom. Yeah, it is kind of all, we're a few weeks out from the sanctions now, and when it happened, it was kind of a shock. Nobody knew really what to make of it except to be angry and confused. And now that it is playing, and we did have a lot of these questions at the time, but now that it's playing out, we see the gradual unfolding of the implications, right? And I don't know if the Treasury is ultimately going to have to walk back these sanctions. Either on a First Amendment basis, the argument that code is speech and that you can't just censor it like that, it seems pretty clear to me that things can't just stay status quo. There are some of these questions that are going to have to be wrestled with and dealt with in a real and substantial way by our policymakers. Anyone else have thoughts on that? Yeah,
just I guess like Coin Center did a really good piece on the whole situation with Tornado Cash this week, and anyone who's interested in getting another perspective on that, especially one from the side of crypto, and that there is a right for this open source software to exist and not be sanctioned, should go ahead and read that. I haven't read it yet, but I've heard good things, and so yeah, I just wanted to mention that.
Thanks, Tim. Yeah, I'm not sure what to make of it. I think it's probably not fair to hold a guy for 90 days without charges. But it does make me wonder, are they trying to get information out of him? Are they trying to identify people he worked with? It's Do they already know? It's really hard to say what's going on behind closed doors, but we can tell it's serious and is going to have real consequences. Any last thoughts on tornado? I'm sure it's something we'll come back to again in the future. It's not going to stop being important anytime soon. In the last 10 minutes here, we want to talk a little bit about markets and things that are driving them, as we always do. One thing worth pointing out in anticipation of that is the merge got, I know this is going to sound somewhat familiar, but the merge got a confirmed date, likely. It's still, even on reading the Ethereum Foundation's blog, it's still put in a range sometime between September 10th and September 20th, but everyone's pretty sure it's going to fall on September 15th now. So we didn't really see ETH rally this week as a result of that, in the way that it, like, for example, when the final successful testnet was executed on the Gurley chain or testnet, we saw a little bit of a pump there, but not so much this time. Could have to do with this meeting in Jackson Hole that the Fed is taking part in. That's been going on this week. I kind of want to get I want to keep the merge in the background because there's more to talk about, but I want to talk about primarily markets and turn to Nathan. So Powell spoke this morning, Nathan, and we were all in meetings. Did you have a chance to hear what he had to say?
Yeah, sure. Yeah, so
excellent.
As soon as I jumped out the meeting, obviously I've had a good look at what's been going on.
Appreciate it.
So it seems that he has really reiterated his comments to halt in inflation. He's probably used some of the strongest language that I've seen at Jackson Hole in a while, saying that he'll use all the tools he can forcefully to attack inflation, which is quite a strong statement. And the word forcefully kind of alludes to the fact that there's going to be further aggressive rate action. So if you look at all the asset classes that are heavily correlated to Bitcoin or used to be correlated to Bitcoin, like gold. So let's start with the Nasdaq. The Nasdaq's down nearly 3% on those comments, and we're seeing Bitcoin has taken out last week's low rather. So it's had a very negative reaction to his comments. I don't particularly see what can get the market back on track now until the next meeting that we've got with the Federal Reserve just slightly after the middle of September. I think the only hope maybe that the market has got is the job numbers from the US economy next week. If they come in absolutely terrible, like negative or something like that, then maybe, they would have to consider slowing down this action. But I mean, even in his words today, Chair Powell acknowledged that the raising of rates is going to cause the economy some pain, but he's totally committed to doing it. So I don't even think that that's going to change the course. So it does seem that the downtrend in the market is back on track, and I wouldn't be particularly surprised to see the market testing back towards the lows of the year so far. Something notable, just for technical traders, I haven't had a chance to look at the on-chain data to see if we've seen any big outflows or inflows of exchanges or what's going on chain. But what I can tell you from last week is that Bitcoin was trading inside a rising wedge pattern. It broke outside of this rising wedge pattern, and only half of the target of the pattern was complete. So if we continue to head lower, it would seem that we're heading towards the target of the pattern, which is 18,000. So my kind of current assessment of Bitcoin at the moment is that if we continue to trade beneath 20,800, then I think there's a strong chance that we're heading towards a very minimum 18,000 US dollars. And if you look at the reaction, like I say, of something like the Nasdaq today, then it really doesn't bode well for markets how they've taken this today. So yeah, overall, very, very negative reaction, and I don't think it's a particular surprise to anybody, the comments that have coming out of Jackson Hole, and people, they basically were latching on to this event being the last hope today for Jackson Hole, as being like an event that could, the Fed could say something positive about the crypto market. There's been some chatter about that, so that didn't materialize. So it's very hard. I guess what I'm saying is it's very hard to see where a bullish catalyst is going to come, and I guess maybe that brings us back to the merge maybe quite nicely, Jacob. If I could end here and bring it back to the merge,
Mm-hmm. Well, yeah, let's do that. Thanks, Nathan, for the analysis. I think you've kind of confirmed my gut feeling about this as well when you say that it's hard to see what the bullish catalyst on the horizon is, with the possible exception of the Ethereum merge. Now, there are a couple of different things to think about here. First, we've alluded to it before, is the troubled idea that Ethereum might fork off into a proof of work chain that gets enough adoption such that it becomes a viable chain in the future. But generally, the community support seems to be, the vast majority of the community support seems to be behind the proof of stake chain. And as we've noted before, like this environmental argument against Ethereum will have some staying power. It will take people a while to learn, but ultimately, like the environmental argument against Ethereum is not going to hold water going into the future. At the risk of prattling on, Navesh, I saw you unmute yourself. Did you have a comment you wanted to interject, sir?
Yeah. I wanted to talk about the merge and like the bullish prospects of it. So yeah, if you look at it, then the risk-free trade for the merge would have been to just hold spot ETH and get the proof of work version and have an additional, you can call it a yield, you can call it airdrop, whatever free money, but you have some additional value. So like the risk-free way to do that would be to hold spot ETH and to sell Bitcoin futures, Ethereum futures, or to hedge it on this options market. And so coming back to what you originally said, we saw a surge in price at the start of August, and it was because of this particular trade that was happening in the market, where large players were just buying spot ETH and like shorting it on the futures market or hedging it in the options market, and that way they secured their yield that they or the additional value that they got from the proof of work chain. But as this trade became popular, it became expensive as well. So there was a lot of I think because a lot of Ethereum was shorted, the funding rate is negative, or another way to look at it is the basis, that is the difference between the spot price and the futures price, is negative right now. So you see now the players who are trying to buy spot ETH and short it have to pay more. So they might not be willing to sacrifice the risk here, because as you said again, that the majority of the people are siding with the proof of stake chain. So it might not have enough value to cover their cost which they are paying for shorting this asset. And so as that happened, we saw less number of Ethereum being bought by whales, that is addresses above 1K and 10K. And even now, I think the situation remains the same, and we have more negative pressure from the macro conditions, as Nathan explained. So so overall, the merge was becoming really popular, and it was primarily because of the proof of work thing. And I think the sell the news part has happened a bit earlier. Once we see the cost basis or the funding rate covering back to neutral territory again, and if it is before the merge, then again the interest would rise, and smart players would obviously just repeat the trade until the situations become against them. So there is a chance that this can play out for a short-term bullish catalyst, but if the macro doesn't change and it keeps on to put a lot of sell pressure, then the rise might be insignificant as well. So yeah, those are my thoughts on the merge and how it could change the course for a while.
Interesting. That's pretty nuanced take. Thanks, Avesh. We got started a little late, so I'd like to, just in case there's anyone in it, if there's anyone in the audience who has a question they'd like to ask or any comments, just do raise your hand and I'll call on you. If not, though, I'll start to round it out here. Any last comments for the day? It's obviously kind of a...
DB's got a question.
Oh, DB. There you go.
Yeah.
Thanks, sir. Let me get you up here. Hello, DB. How you doing?
Appreciate everyone's time and enjoyed this today. Was curious to know if things do decelerate in prices because of the Fed increase. You know, looking at Ethereum, where do we think it could retrace to?
I can speak here. So yeah, it hit like what 900, 880 in June. If things get that bad and you know this is carrying on for another year, you know, then maybe it goes to those levels again. You know, let's see. This is like it's realistically only 8 months into a bear market, so like it can get worse in my opinion. Yeah, people were calling for like 500 back in June, and obviously that didn't happen. But yeah, sure. Jay Powell's probably right, and he has a lot of control. There is more pain ahead potentially. Yeah, so yeah, let's see.
I appreciate that.
Yeah.
Any thoughts there, Nathan?
Yeah, so I totally agree with what you were saying, Christian, about the most natural assumption would be that the market would return to the lows. But I think last December, the best level that I can find for Ethereum, like the lowest it could go would be 480. But I agree with what you're saying. If it returns to the lows from where we're trading, I wouldn't be surprised if it was, you know, maybe $900 being the worst. But I think, you know, bracing myself for the very worst case scenario, I think 480, 500 would be an amazing price for Ethereum. I'm not sure if it comes, and I think we'd have to see a lot of pain in the market, but that would be my inkling about how low it could go.
Thanks, Nathan. For what it's worth, I'm not an expert on prognosticating these things, but I tend to agree with both of you. Any last comment? Anybody else want to weigh in on this?
Yeah, I would just say as well. I know, Nivesh mentioned the hype around the proof of work stuff and how that helped. The kind of narrative. I think. Yeah, there's obviously like the impact of the Ethereum fans have been like shouting about it a lot as well. But I would just reiterate it's probably like a long-term play, right? Because realistically, like. Yeah, the supply is, you know, becoming ultrasound, as they put it, potentially. But like that plays out over many years, so it's not like it suddenly starts decreasing and then it's like, oh wow, like ETH is going to 10k. Maybe it takes like 3 years for people to realize that, and yeah, like as we see, there's no like retail froth anymore. There's no like excitement and sort of the everything that we saw that characterized 2021 is more like a wind down, and it's kind of like the people participating now are just kind of the same people moving between stuff. There's no new money coming in, so I think that's worth considering as well, long-term play.
Thanks, Christian. And in our last few minutes here, we've got Joey on stage. Joey, what can we do for you? How would you like to contribute, sir?
Hey everybody. I just wanted to fill in on the ETH thing. I think ETH could go even lower, because I'm looking at the charts right now. Like my target for Bitcoin is $10,000. We could go that low, so that ETH could go to let's see. I think we could go even lower. We could go to like 250.
Mm.
That's my target for ETH.
I don't think ETH's going to go to 250, but yeah, if it does, I'll be there buying with you.
I'm going to load up on it if it gets that low.
Yeah, I think that would probably be a good idea, even if it's at 250 for a day. All right. Good conversation, you guys. I want to thank everybody for joining us. It's been a delight having you all here. Love participating in these conversations. Thanks everybody who tuned in. Thanks everybody who chatted. Have a great weekend, everybody. We'll see you all next week.
Thank you.
Take care, everyone.
Thanks, guys. See you later. Bye.
Bye, everyone.